After the stock market crash of 1929 and the Great Depression, President Franklin Delano Roosevelt signed the Investment Company Act of 1940 into law. This legislation is considered one of the most important pieces of regulation governing the financial markets.
The Investment Company Act of 1940, also referred to as the 40 Act, is a disclosure regime. It's primarily intended to focus on conflicts of interest and disclosing those conflicts of interest to fund investors, in particular fund shareholders of mutual funds and ETFs, so that they can make informed decisions about whether to invest in a mutual fund or an ETF.
The importance of the 40 Act is creates the legal framework in which individual investors can feel confident their money is being supervised by an independent board of directors without conflict. Approximately $25 trillion of funds is managed in a format under the 40 Act. So it represents the largest pool of capital for the average investor anywhere in the world.
The 40 Act defines the responsibilities and requirements of mutual funds and ETFs, allowing a sense of transparency between the public and their mutual fund and ETF investments. Over time, the Act has evolved to stay current with changes in financial markets.
Well, the role that the board of directors play is they supervise all the activities of the fund and represent shareholders and their interests. So that goes everything from accounting to compliance to operational issues, legal, and having a board that is fully informed and knowledgeable and represents you is critical to the structure of investment funds as we know them today.
So knowledge, expertise, experience, and cost. Shareholders can take comfort in the safeguards that are provided by the 1940s Act.
Today, investment managers are utilizing multiple series trusts for expertise, speed to market, and cost-effective turnkey solutions. Founded in 1988, the RBB Fund was the first of its kind. Today, it is the oldest multiple series trust, and it relies on its years of expertise and quality service. RBB is a turnkey ETF and mutual fund solution.
As the first series trust, we always had a unique place in the industry. The bank determined that they no longer wanted to have any representation on the board of RBB, and essentially handed the keys to the bus to the board, where historically they had had one or two seats on the board. They said they didn't want to have any, and that the board should take all the credit responsibility and all the other responsibilities under the 40 Act under its own umbrella. We at that time determined that if we're going to take all that responsibility, we want to make sure that we have the best possible relationship with all the service providers that perform activities for the fund, and we bid out the services contracts at that time to make sure not only do we get the cheapest price, but we got the best protections as banks were seeking to rewrite their contracts and limit their liabilities under certain circumstances. And that's key for a board to read those documents and understand them and negotiate them. And the board continued to constitute itself in such a manner that it focused on being a scale provider of services to fund sponsors and leveraging all of our contracts and relationship to be the low-cost provider in this industry at the highest quality.
RBB provides a very business-friendly model that allows for a turnkey approach to entering into the ETF and mutual fund space. It's one of the premier platforms in the industry where institutional asset managers can go and be provided with bundled solutions, including fund administration, TA, every possible service provider function that you can need to launch an ETF or a mutual fund.
The majority of the board represent some of the brightest and respected minds of both the general industry and, more importantly, the fund industry itself.
Many of the trust officers and trustees are really, the breadth and depth of their collective experience really provides, a trusted advisor role with respect to shepherding mutual fund and ETF managers into the space. Also allowing mutual fund and ETF managers that are looking to reorganize from other trusts, where maybe the board or the trust officers don't have the same breadth and depth of expertise, and they're looking for a marquee platform to ensure that they have the level of governance and the level of, trust officer expertise to be able to be successful in the market.
RBB continues to shape the financial market by honoring its past while staying ahead of trends. The amount of new ETFs coming to market can overwhelm investors. RBB provides investors access to a broad range of investment solutions.
One of the biggest determinations for us was the economics of scale. We're really able to use the Series Trust provider to leverage us along with other issuers to get the best pricing across all of our different vendors. That, coupled with the vast amount of experience that we're able to carry from them, led us to ultimately move to a Series Trust. RBB is an extension of our team. I work with them day to day, week by week. It's not waiting to the end of the quarter to keep them up to date or for them to ask me questions. It really has been a streamlined relationship. I'm able to utilize them for questions from our team and then back and forth. So it's able to provide our shareholders with the best service that we can.
The future of RBB is bright and exciting. We have a long history that our chairman, Arnie Reichman, has described in his comments. I joined just about a year ago and look forward to growing the platform. We currently have about $21 billion in assets under management, working with nearly 15 advisors and 60 unique investment strategies. We really think over the next 5 years, all of those numbers are going to double.
To find out more, visit www.rbbfund.com.